Most people think of stocks and shares as long-term investments. You buy low, you wait, and if you're lucky, you sell high. But what if I told you there's another way? A lesser-known, powerful financial tool that can unlock instant liquidity without ever selling a single share. This is the story of loans against stocks and shares, how the wealthy use it, why it matters, and how you can use it to your advantage. Number 1. The concept. What is a loan against shares? Imagine you've built a portfolio over the years. Tech stocks, blue chips, maybe some dividend aristocrats. It's worth a lot, but that value is locked in. If you need cash today, you'd traditionally have two choices: sell your shares or go to the bank. But there's a third way: a loan against your stocks and shares. Your shares become collateral. You borrow against them without selling. It's like a mortgage on your portfolio. And just like any secured loan, the interest rates are often lower than credit cards or personal loans. Number 2, how it works. Let's break it down. Say you own $100,000 in shares. A lender, usually a bank or a brokerage, might offer you a loan for up to 50% of that value, depending on the risk profile of your holdings. You now have $50,000 in your account, ready to use. No need to sell your stocks, no capital gains tax, no disruption to your investment strategy. Number 3, who uses it? The wealthy's secret weapon. This isn't just for the average investor. In fact, it's a favorite strategy among the wealthy elite. From Silicon Valley startup founders to Wall Street executives, many of them fund their lifestyles, business ventures, and real estate purchases using loans against their stock portfolios. In 2021, Elon Musk famously took out a multi-billion-dollar loan backed by his Tesla shares instead of selling them. Why? Because selling would mean paying billions in taxes. Borrowing? Virtually tax-free liquidity. Number 4, types of loan against shares. There are several ways to structure these loans. 1. Margin loans, usually offered by brokerages. Quick, flexible, but risky if your portfolio is volatile. Second line of credit, secured by securities. You get a revolving credit line against your stocks. Use it when you need it. 3. Non-recourse loans. The lender can only claim the collateral, not pursue your other assets. Number 5, risks and red flags. With great power comes great responsibility. Loans against shares can be incredibly useful, but they can also backfire. Market volatility. A sudden crash could trigger a margin call. Over-leverage, taking out too much against your assets, can spiral out of control. Interest accumulation. Even low-interest debt adds up if left unpaid. Many investors get burned when they use these loans to fund risky bets or lifestyle inflation. This isn't free money, it's borrowed money, and the markets are always unpredictable. Number 6, why it's growing in popularity. So why is this strategy becoming more mainstream? Rising stock markets have increased investors' net worth on paper. Interest rates, while higher than before, are still attractive for secured loans. And in uncertain economic times, access to quick liquidity, without selling, is more appealing than ever. Financial institutions are also pushing these products to high-value clients, making it a growing trend in private banking and wealth management. Number 7, should you use it? So the question becomes, should you consider a loan against your shares? If you're a disciplined investor, if you understand the risks, and if you have a clear use for the funds, whether that's to buy property, fund a business, or avoid selling shares during a downturn, then yes, it can be a powerful financial strategy. But if you're living paycheck to paycheck or hoping to use borrowed money to gamble in the markets, think again. In the world of investing, knowledge is power. And knowing how to leverage your assets without selling them is a game changer. A loan against stocks and shares isn't for everyone, but in the right hands, it's a financial superpower. You don't need to sell your future. Sometimes, you just need to unlock it. We will give you the term sheet with lowest interest rate with 50 to 70% loan to value. We are transparent, ethical, and operate with integrity. We will not disappoint you. Fill out a short form our site with ticker symbol and we do the rest. Thanks for watching. If you found this video helpful, make sure to hit that like button. It really helps the channel grow. Got questions about loans against shares or want to see a deep dive into another financial strategy? Drop a comment below. We read every single one. If you found this useful video and subscribe for more smart money tips. Got questions? Drop them in the comments. See you in the next one.